What is going on? Welcome back to Trending Stocks. I want to talk about the top 5 squeeze stocks to add to your watch list for the very first week of 2024. But before I get into any of that, make sure you guys hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So starting off with good old data points, there's basically 4 things to watch for. And I guess on a side note, Monday is closed. I'm sure a lot of you already are aware of that. Happy New Year's in advance. Hopefully 2024 is a hell of a lot better than 2023. But there's basically 3 things to watch for. So starting off on Wednesday, January the 3rd, FOMC meeting minutes. So that one always is kind of a hell of a lot of volatility as a result of that, especially I feel like this one more specifically because the broader market has rallied as a result of, I guess, the last meeting. So technically, this one could break that whole Santa Claus rally or help propel it higher. So this one will be a lot of volatility. Aside from that, ADP, non-farm employment, and then right here, non-farm payroll. So 2 very big indicators linked to consumers. But aside from those, there's a hell of a lot of Fed speakers throughout the week. So they're clearly done their holidays and they're back at it. So a lot of those could cause a lot of volatility within the broader market. Currently, the fear and greed index is around 76. So you will want to see naturally the broader market propel a lot of value and discount stocks higher. And so a lot of the stocks I'm going to be talking on kind of fit that criteria somewhat. And these are some of the companies unveiling their earnings as of, I guess, Wednesday morning. No real big heavy hitters. So if one of these companies does miss on their earnings, it's not the end of the world. It won't really cause a lot of volatility within the broader market. So that's kind of some stuff to know on the back end on the broader market. But starting off with stock number 5, it is going to be BMEA Fusion. Ticker is BMEA. Over the last 1 year, it is up 73.06. Year to date, it is up 71.23. And on Friday, it did go down 6.26. This is what they do as far as a company profile. So you can always pause it, read it, go through it, and all the other fun jazz. It is in the biotech industry, and they have done no recent reverse stock splits because that is something I'm going to break it down on why it's important. But if you are looking for a lot of good compiled information such as press releases, SEC filings, everything that you need to know under the sun, take a look at Seeking Alpha Premium for a 7-day free trial. It definitely does make investing quite easy. But like I mentioned, data points, that is why all these companies are on this list, but I have switched it up a little bit. So instead of going based on the top 5 for short score, and the higher the number, the higher the likelihood of a squeeze, like those companies typically always stayed the same. Like time and time again, every single week, those same 5 stocks. But now I'm going to go based on the short interest. So that should switch things up every single week quite considerably and really be more of a positive indicator towards stocks that actually do squeeze or just shorts leave, like either or. But once again, data point wise, utilization is 76.32. Short score is 77.34. As of Friday, shorts did increase about 51.13 thousand shares in this company. 59% of the free float is being shorted and 11.4 million shares overall are being shorted. Cost to borrow average is around 2.96 and through the interactive broker short availability does indicate around 55,000 shares available to be shorted. So kind of interesting stuff for that. But moving on to stock number 4, RILY Financial, tickers RILY. Over the last 1 year, it is down 38.89%. Year to date, 38.61. Obviously, with being a new year, those are very much correlated, kind of. And on Friday, it did go up 1.35. This is what they're all about, company profile, but in the industry, it does indicate investment banking and brokerage. Based out of LA from what it looks like. Data point wise, utilization 97.59, short score is 90.24. It is on the threshold list, so that's something to keep note of because the new SEC transparency rule will really help these companies that are on the threshold list as well as 13Fs going forward. So this one will be hopefully very interesting once we do see a lot more transparency as a result of that. But on Friday, shorts did return 193.93 thousand shares. 57.77% of the free floats being shorted, and 9.4 million shares overall are being shorted. Cost to borrow average is 67.45, and it does indicate that there is 0 shares available to be shorted. So kind of interesting stuff. Moving on to stock number 3, that is right here, tickers SCOR, SCOR Inc. And on Friday, it did go up 9.15% over the last 1 year, 25.45% in the red, and similar nature for the year to date. This is what they're all about in the advertising industry. So kind of volatile, but another US based company. On the data point wise, utilization is 4.82, short score is 53.78. Clearly there must be a glitch behind the scenes because it does show no change from Friday, but 68.39% of the free float is being shorted, and 2.03 million shares overall are being shorted. Cost to borrow average is 3.5, and around 100,000 shares is available to be shorted. That is through Interactive Brokers. Stock number 2, so 𝗖𝗓𝗧 Pharmaceuticals, ticker is CYCC. On Friday, did go down 5.99%. Year to date, down 74.3%. This is what they're all about in the biotech industry. So kind of interesting stuff for that. Data point wise, utilization is 70.48. Short score is 70.06. Once again, similar nature, there is no real change from Friday. 73.91% of the free float is being shorted, and 622.92 thousand shares overall are being shorted. Cost to borrow average is 8.5, and around 10,000 shares available to be shorted. And then stock number 1 is this one. So this one has actually made the other list based on the short score in the past, and that is Bolero Corp, tickers BOWL. On Friday, it did go up 0.78. Over the last 1 year, it is up 7.11%. So it has gone up quite significantly, in fact, since around the $10 range. So that's kind of a good thing. This is what they're all about right here, and the industry is leisure facilities. So kind of fairly interesting for that. Data point wise, utilization is 93.96, short score is 86.5, and last time I remember it was also on the threshold list, so they've kind of rectified that. But 32.26 thousand shares were returned on Friday, and 83.07% of the free float is being shorted. 17.3 million shares overall are being shorted. Cost to borrow average is 28.59, and around 80,000 shares is available to be shorted. So a lot of interesting stuff, a lot of interesting companies. I'm going to give you a bonus one as well that isn't necessarily on this list, just I feel like based on some of the data points, kind of looks fairly good, but I think as well, like the amount of shares being loaned versus what is being shorted is a very good indication that there is a hell of a lot of naked shorting, and that is Workhorse. So ticker is WKHS. On Friday, it did go down 2.7. Over the last 1 year, down 76%. But once again, this company does have clearly a lot of naked shorting behind the scenes, so that's why I wanted to throw this one on there. I used to cover it way back in the day until they lost that contract, or didn't really get that contract, and yeah, it was doomed, unfortunately, at that stage. So they just fell apart very, very fast. But 20.72% of the free float is being shorted. On Friday, shorts did increase 361.26 thousand shares, and 52.7 million shares overall are being shorted. Cost to borrow average is 19.83, and around 1.4 million shares available to be shorted. So this stock definitely is very interesting. They've fallen off the radar quite significantly, but then again, like, it does have a lot of good opportunity. It hasn't really been piggybacking off of the broader market. So assuming all the data points I mentioned at the very beginning go according to plan, and the market does continue its Santa rally, or whatever you want to call it, then a lot of companies and big money are going to be looking at discounted plays, companies that have not participated in the rally, so they are going to be seen as value stocks. That definitely could really help Workhorse behind the scenes, and as well, with there being a lot of naked shorting, it could really stand to benefit. So let me know your thoughts on those 3 stocks. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. And one final thing, take advantage of this promo. Only a couple days left, only up until December the 31st. Sign up for an account with Moon, throw $100 at it, and you get 5 free stocks. Each stock is valued up to $2,000. So this is one of the best deals on the market. Link in the description below and also the comments. With all that said, appreciate all of you watching.